In the world of investing, there's a certain magic to earning a steady stream of income month after month. Imagine a life where your investments pay you, not just yearly, not even quarterly, but every single month like clockwork. That's the freedom that comes with monthly dividend ETFs. A freedom where your income flows like a river that never runs dry. For Harry and for so many others dreaming of financial independence, these ETFs are not just investments. They're stepping stones to a life of consistent income and security. This video will reveal the ultimate portfolio of monthly dividend ETFs, ranked from great to the absolute best, designed to help you earn consistent income. With just a $100,000 investment, Harry begins his journey to financial freedom. Spoiler alert, by the end of this video, you'll see how his smart moves unlock significant returns. But first, what are monthly dividend ETFs, and why are they so powerful? Think of them as investment funds that pool money to buy a diversified portfolio of dividend-paying stocks. The best part? These ETFs generate consistent income for investors by paying dividends every month. No waiting for quarterly checks, just reliable income to cover your needs. These ETFs not only provide steady cash flow, but also have the potential for long-term portfolio growth. Imagine planting a tree today, and over the years, it grows taller and bears more fruit. Monthly dividend ETFs work just like that. So, are you ready to unlock the power of consistent income and build a portfolio designed to grow with you? Let's dive into the top 5 monthly dividend ETFs you need to know this year. Wisdom Tree US High Dividend Fund, DHS. The Wisdom Tree US High Dividend Fund, DHS, is an exchange-traded fund, ETF, that seeks to track the performance of high dividend-yielding companies in the U.S. equity market. DHS has a net asset value, (NAV), of $97.49, a distribution yield of 2.58%, and an expense ratio of 0.38%. The fund's top holdings include ExxonMobil Corporation, 6.33%, AbbVie Inc., 5.74%, and Altria Group Inc., 4.77%. Sector allocations are as follows: financial services, 24.93%, energy, 16.70%, and utilities, 14.81%. Over the past 3 years, DHS has achieved a compound annual growth rate, CAGR, of 10.42% with a 1-year return of 30.99%. The fund maintains a payout ratio of 44.57%, indicating that it distributes 44.57% of its earnings as dividends. The dividend growth rate stands at 1.65%. And the annual dividend per share is $3.45. For an investor like Harry, a $100,000 investment in DHS is projected to grow to approximately $174,494 after 20 years, assuming the historical CAGR of 10.42%. After 30 years, the investment could reach around $297,129. Based on the current distribution yield, the annual dividend income after 20 years would be approximately $6,898, and after 30 years, it would be about $11,724. Invesco S&P 500 Low Volatility High Dividend ETF, SPHD. The Invesco S&P 500 Low Volatility High Dividend ETF, SPHD, is an exchange-traded fund that aims to provide investment results corresponding to the performance of the S&P 500 Low Volatility High Dividend Index. SPHD has a net asset value, or NAV, of $49.99 and offers a distribution yield of 3.46% with an expense ratio of 0.30%. The fund's top holdings include Verizon Communications Incorporated, 2.89%, Crown Castle Inc., 2.87%, and Altria Group Inc., 2.82%. Sector allocations are as follows: utilities, 19.83%, consumer defensive, 18.49%, and real estate, 13.68%. Over the past 3 years, SPHD has achieved a compound annual growth rate, CAGR, of 8.93% with a 1-year return of 30.79%. The fund maintains a payout ratio of 44.57%, indicating that it distributes 44.57% of its earnings as dividends. The dividend growth rate stands at 1.65%, and the annual dividend per share is $3.45. For an investor like Harry, A $100,000 investment in SPHD is projected to grow to approximately $174,494 after 20 years, assuming the historical KAGR of 8.93%. After 30 years, the investment could reach around $297,129. Based on the current distribution yield, the annual dividend income after 20 years would be approximately $6,898, and after 30 years, it would be about $11,724. Invesco KBW Premium Yield Equity REIT ETF KBWY. The Invesco KBW Premium Yield Equity REIT ETF KBWY is an exchange-traded fund that seeks to replicate the performance of the KBW Nasdaq Premium Yield Equity REIT Index. KBWY has a net asset value, NAV, of $20.21 and offers a distribution yield of 7.88% with an expense ratio of 0.35%. The fund's top holdings include Global Net Lease, Inc., 5.12%, Necessity Retail, REIT, Inc., 5.06%, and Office Properties Income Trust, 4.95%. Sector allocations are as follows: diversified REITs, 30.5%, retail REITs, 25.3%, and office REITs, 20.2%. Over the past 3 years, KBWY has achieved a compound annual growth rate, CAGR, of 1.04% with a 1-year return of 25.57%. The fund maintains a payout ratio of 90%, indicating that it distributes 90% of its earnings as dividends. The dividend growth rate stands at 1.5%, and the annual dividend per share is $1.59. For an investor like Harry, a $100,000 investment in KBWY is projected to grow to approximately $122,019 after 20 years, assuming the historical KAGR of 1.04%. After 30 years, the investment could reach around $135,000. Based on the current distribution yield, the annual dividend income after 20 years would be approximately $9,611, and after 30 years, it would be about $10,626. Global X Super Dividend ETF, SDIV. The Global X Super Dividend ETF, SDIV, is an exchange-traded fund that seeks to provide investment results corresponding to the performance of the Selective Global Super Dividend Index. SDIV has a net asset value, NAV, of $21.90 and offers a distribution yield of 10.83% with an expense ratio of 0.58%. The fund's top holdings include UAUN Industrial, 1.83%, PT Adaro Energy Indonesia Tbk, 1.32%, and Van Lanschot Kempen, NV, 1.31%. Sector allocations are as follows: real estate, 41.62%, energy, 21.00%, and financial services, 8.38%. Over the past 3 years, SDIV has achieved a compound annual growth rate, CAGR, of 6.74%, with a 1-year return of 17.88%. The fund maintains a payout ratio of 44.57%, indicating that it distributes 44.57% of its earnings as dividends. The dividend growth rate stands at 1.65%, and the annual dividend per share is $2.37. For an investor like Harry, a $100,000 investment in SDEV is projected to grow to approximately $374,494 after 20 years, assuming the historical KAGR of 6.74%. After 30 years, the investment could reach around $697,129. Based on the current distribution yield, the annual dividend income after 20 years would be approximately $40,598, and after 30 years, it would be about $75,524. Global X Super Dividend Emerging Markets ETF SDEM. The Global X MSCI Super Dividend Emerging Markets ETF SDEM is an exchange-traded fund that aims to provide investment results corresponding to the performance of the MSCI Emerging Markets Top 50 Dividend Index. SDEM has a net asset value, NAV, of $24.68 and offers a distribution yield of 6.78% with an expense ratio of 0.68%. The fund's top holdings include Eastern Company SAE, 3.08%, Nepi Rockcastle NV, 2.48%, and ABSA Group Limited, 2.47%. Sector allocations are as follows: financial services, 31.79%, consumer cyclical cyclical 20.31%, and energy 15.15%. Over the past 3 years, SDM has achieved a compound annual growth rate, CAGR, of 3.16% with a 1-year return of 16.91%. The fund maintains a payout ratio of 44.57%, indicating that it distributes 44.57% of its earnings as dividends. The dividend growth rate stands at 1.65%, and the annual dividend per share is $1.67. For an investor like Harry, a $100,000 investment in SDEM is projected to grow to approximately $180,611 after 20 years, assuming the historical CAGR of 3.16%. After 30 years, the investment could reach around $244,335. Based on the current distribution yield, the annual dividend income after 20 years would be approximately $12,243, and after 30 years, it would be about $16,563. If you're ready to take the next step, explore these ETFs further and consult with a financial advisor to tailor your investments to your unique needs. The journey to financial independence begins with informed decisions and disciplined action. Thanks for watching. And if you found this video helpful, don't forget to like, subscribe, and share it with others looking to build a strong financial future. Stay tuned for more insights and strategies to help you grow your wealth. Until next time, happy investing!